Okay, you ready to roll, Spence?
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I will buy the stock for a penny.
with everything you need to start your trading day.
Good morning, everyone. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick on the show today. Got a good one for you. Two guests on the docket. First up, Brad Lammensdorf. He's a money manager and editor of the Lammensdorf Market Timing Report. Then at 8:35, we're going to have Nick Shaheen, as we do every Tuesday, our go-to options expert. But before we get to our guests, we got to talk about Ford. Got a nice little write-up in Barron's over the weekend. Going to talk about that. Got a lot of ratings to discuss this morning. A lot of small ones, but a lot of them nonetheless. We're going to run through those as always. If you have any questions, feel free to throw them in the chat, and we'll get to them as we can. Joel, how are we doing in the S&Ps this morning?
We got some red on the board here, down 575 at 2408. The 1475 high that you see on your screen is not the actual high. We were trading last night, Sunday night, and Monday morning. We hit 2417. That's the area of the all-time high, 1775. Coming back on the downside, Friday's low, '08 even. That's where we're hanging out. Below that, maybe getting into the lower 2400s. Crude did mount a rally last night, got over $50, but now back down 40 cents at 49.40. Gold and silver in the red. Gold in the red by 590 at 1265 and a half. Silver inching towards $17, down 3 cents at $17.29. 802. Dennis, how you doing on this Tuesday morning?
Looking at a little sell-off, you hit your screen a little bit. You're like, is it red? Is it allowed to be red? We never are red when we come in the morning, are we?
Should I reboot my computer here and
I
see
think so. I think it could be an error. Red.
a little
Not
bit?
allowed to be red.
I don't know.
A little bit of red anyways.
Well, is it sell in May and go away? We have had a rally in the month of May at new
About the end of
all-time
May.
highs. What do you think? 2 days left in May, Dennis. Are you getting flat going to 100% cash? Maybe a little
No.
bit net short?
Sorry. No, I'm not. Sticking with my investments, obviously. Sticking long-term investments anyways. And short-term here, we haven't talked the S&P here for a while. Bring it up here. Let's look at the E-mini chart. Break it down here for us, Joel. What are you seeing on the E-mini chart?
I'm just seeing it go up and up and up and up, and then you have a little consolidation period. Right now, you have 3 highs at 24.17.75, 2 highs at 17 even. But the thing that's really, really tricky about this market is you do make the new all-time highs, you do get the consolidations, but you get these breaks, and I mean, there's like you bat an eyelash, and we're right back at all-time highs. I mean, it's just that breaking that buy the dip mentality just doesn't seem to, I like 2 good down days in a row or 3 good down days in a row.
You just don't get it.
Seems like it's just such a rarity.
Just a myth when you see 2-3 days in a row. There's too many investment managers still underinvested here and just chasing. And every time we pull back, we keep saying every time it pulls back 1-2%, everybody scrambles to buy again. They buy us back to highs. There's individual stocks that get beat up, but the overall market, it's just rotation. They don't rotate out of stocks anymore. They just rotate from sector to sector, but they stay in the market. They don't rotate out of stocks altogether. That's the difference here. But lots of individual stocks here to talk about, Joel. There was upgrades and downgrades. There was a ton of them over the weekends. The analysts coming out of their slumber. Get to those in just a couple seconds here. But first, I want to talk Netflix. Spencer, is there a House of Cards trade you were saying maybe in the cards?
I was asking you that. House of Cards. House of Cards. Was it season 4 or 5? I've lost count.
I think it's 5. I think it's even
it may be 5. Premieres, or I should say, is released today. by Netflix, of course, their core. You could argue their core property. So, Dennis, is there a House of Cards trade? I know you're taking the rest of the week off to watch House of Cards. The rest of us have to work though. So, is
Yeah,
there?
I know. I love House of Cards. Me and my wife are both big fans here. We probably binge watch it as quickly as we can. Maybe when we're up at 2 in the morning with the newborn. But you got to say Netflix here. It's maybe already had the House of Cards trade. I mean, we've had an impressive May for Netflix. It went from $140 up to 162.43 the close. Did make a high 100 and what was the high yesterday or on Thursday? 164.10. So it's kind of already had a little bit of a House of Cards trade, but it is trading green in the pre-market. It's one of the stocks that are up today, and sometimes you see a little bit of running up here. The day it's released. I haven't heard any reviews of it yet. So, maybe some people have already binge watched it if it's already out on Netflix. I'm not sure if it comes out at like midnight or if it
Yeah,
comes out in a few hours. Maybe somebody can let us know if it's on their Netflix right now, but it's supposed to be released today.
I actually don't know when today comes out. I just know today is the day. So
Yeah,
I guess we'll see. It was part of what put Netflix on the map in terms of it did put
for
Netflix on the
sure.
map in terms of original content. So we'll see.
Only
Yeah.
TV show, only TV show Lisa and I watch. That's the only one. We
It's
don't.
going to be
We
interesting.
don't.
So,
We don't.
Kevin Spacey, phenomenal actor. So I'm excited to watch it as well. Joel, break this down though. Netflix,
What's there
NFLX.
to
I mean,
break
it's up
down,
with stock,
Dennis? What's there to break down? You just
stocks at an all-time high, basically.
yeah, 164.10. You made that high on Thursday. Yesterday you just missed it. The only thing I'd give you, the only number I'm really paying attention to, besides that all-time high, Dennis, and we talk about that, is the all-time closing high. Now, if you were focusing on that number from the session from Thursday, got to get my day straight here. That was the exact high, 163.05. That was your all-time closing high on Thursday. Your high on Friday, 163.05. So that's your number. Haven't quite hit it yet in the pre-market. All-time high, 164.10. Chasing stocks because the new TV show's coming up is not really my cup of tea here. But as you can see, that 163 is posing resistance early in today's session.
Talk about chasing stocks. What about Nvidia here? The stock has been an absolute monster in May. People forgot about it for a few months, and then it caught a bid on May the 9th. The gap and go. It hasn't looked back at all. Started the month down at 104. Finishing the month, well, it's not finished yet, but it's now trading at 142 handle. It's up another buck here again this morning. Market's down. Nvidia don't care. It's up anyways.
Oh, because Tencent Holding may buy some more, Dennis. And it's not that they've bought some more. They may buy some more in a future
Who's
date.
that 10-cent holding?
Have
What?
you heard of that company? Tencent
No.
Holding
You call it
Company?
SoftBank 10-cent holding?
No, Tencent is a Chinese company.
Oh, there's another company going to buy. It was SoftBank on Friday.
Oh, okay.
Wait, that's who you're talking about, Joel?
Uh,
Wasn't it SoftBank?
well,
I don't know who Joel's.
Joel's starting
I mean,
rumors.
yeah.
Yeah, maybe not. Tencent Holding is a Chinese holding company. They do internet stocks or internet companies.
I, I know SoftBank
All
I saw
right,
last
all right.
week, but
I mean, they're all the same. SoftBank, Tencent.
they're
You know.
not a Chinese company investing, potentially.
Yeah,
Potentially.
driving price up higher. Big move in this one. We hit an all-time high on Friday at 145.28. Backed off to settle here at 41.84. So using that 41.84, that's going to be my bogey today. We're trading above it right now. Dennis, we were talking, stocks that, used to move with that, and we both kind of been eyeing this AMD here, this consolidation here. What do you mean? I mean, should you buy it with a, let's say we cut out under 10.5, or is this thing, if it's not moving now, it's not going to move?
That's what I'm wondering, is it concerning here? Because at the beginning of the year, AMD was moving step for step. It seemed like with NVIDIA, they were moving together. One would be up, the other would be up. And AMD has completely ignored the NVIDIA May rally. So you could look at it from two perspectives, I guess. You could say it's got some major catching up to do, or you could say maybe there's something, if it can't rally here, what's going to take it higher? So, it's been some major resistance here last 4 or 5 days, right? $11. Big hole number, psychological level. Highs 1101, 1105, 1106. So, they can just an 1105 and a half. So they're all right there. I mean, resistance very well defined from the last few days. I think it's got to get up above there. I want to see it get like 1110, 11 and a quarter. Start moving up again, and then I might get interested. But, just coming in here and saying it's going to go up because NVIDIA is going up, hard to say that. Joel must be on
what?
mute.
I'm not on mute. What about these analysts? That remember when they were ganged up on Nvidia, the double downgrade, the triple downgrade, knocked it down. Who was that? Roth Capital, Nomura, BMO. Remember that back in February? I
Whenever you
think.
get three analysts on the same side, it's
There you
usually
know.
time to go the other way.
Exactly. And then Pat Crest hopped in on. I think Goldman might have defended it in the meantime, but just long and short term ramifications of analyst ratings, and wonder what those guys are thinking now.
Well, they're chasing. They're going to be chasing price, and that's the one thing we always talk about on the show. Analysts chase price because when they get it wrong, they got to do some fancy adjusting. Because at the end of the year, they don't want to look really out to lunch. So a lot of times you see when stocks making new highs, you see multiple people coming out and starting to upgrade it because they're playing catch up. So there's a lot of good analysts out there, a lot of do homework, but there's a lot that just chase price as well. And that's why when stocks making new highs, it can kind of really get going, the ball going in one direction as more analysts play catch up and upgrade the stock as it's moving higher.
All right. Do you want to stay on the?
Let's stick with the analysts
Okay.
because there was just a ton of analyst action here over the weekend. Not a lot of huge companies, but some notable companies here. I want to go to first to Buffalo Wild Wings, BWLD. I actually ate there Friday night. Bring my boy there. He kind of tears the place apart, but it's always good. I always enjoy Buffalo Wild Wings. BWLD. Stock's getting downgraded today by Wedbush. It's trading down 3 points here in the pre-market. It's a stock that's really been quiet here for a long time. I mean, we look out to the weeklies here. This stock's gone nowhere in a couple of years here now. And if you actually go to 2015, it was a lot higher. It was up over $200. Is it time to get wild in some Buffalo Wild Wings?
Trading down here, you do have it down in the pre-market. I'm not a big fan of the Buffalo Wild Wings. I think that they're
No? Don't like the
no.
wings?
I think they're kind of cheap. I'm not cheap, but I just think they're kind of small. I'm more of a.
Really? I thought they were actually pretty good.
What about Spencer? Can you weigh in on that?
Yeah, we got two traders here. One saying good wings, one saying not so good wings. You're the tiebreakers.
I think they're good for what they are, which is a chain restaurant, so-called fast casual. They're not better than your local wing spot, probably.
Probably
but
not.
they're better than any other chain wings restaurant. Not that I can think of any right now, but I'm sure they exist.
I think they're pretty good.
It's they do more advertising during. I mean, they're kind of quiet during the baseball season. They're more of a football and basketball, but down on very light volume. So just beware. I don't know if it's
400
off or
shares.
down. Yeah, a couple hundred shares. I like 146 a lot, and that was your low on Wednesday here, 146 and a quarter. You also had a low there, 146 even on March 29th. So upgrade, downgrade, good wings, bad wings. I like 146 on the downside.
Rob Hood wants to know about their brother-in-law, Wingstop, WING. That stock's been getting beat up here last few days here too. Had the gap, but it wasn't the go on this one. It filled the gap, and now it's actually starting to break down here just towards the end of the month. 28.61, the low on Friday. Don't know if there's going to be a sympathy move here or not, but this WING chart not looking that hot.
Wingstop actually reported, this is 2 weeks ago now, 3 weeks ago, that they're entering the UK market over the next 12 years with over or with 100 locations over the next 12 years in the UK.
Oh.
Well, can anybody weigh in? There's none in this area, is there?
I've never ate at a Wingstop, no.
I don't think so. There's any in Michigan. I haven't seen one.
Okay.
Can't give you the taste test on the Wingstop. Not sure about that one, but Joel give you the technicals though.
Boy, anytime this thing gets up in the $32, $33 area, bases the monthlies, it's been a good sell. Trying to find support in this, a little difficult here. You spiked down to 3 different times, or you had 3 different lows in the $29 area, trading just above it. So that's not good when you hit support and you don't get a good bounce off it. So things look pretty clear here. If you can't hold this 29 off the hop, I'm looking for the lower 28s. I see 3, 4 lows, 5 lows, right around 28 even in Wingstop. This was back in early to mid-April.
talking about AMBA, Ambarella is getting downgraded here this morning at Pacific Crest, and that stock actually getting hit pretty hard. Now down over 3 points here. It'd been on a run. It had a pretty good May here as well, going from 55 to 65. Well, it's giving back 3 points here this morning. Joel, is it a buying opportunity, or what's your thoughts
Oh,
on AMBA?
I think the stock had its run in and stay when I went to 120 and I bought puts, but
I
too
remember
short.
that.
Yeah, too short of dated puts. Nice run up, and now you're giving it back here. Pre-market low 61.55. I think it can hold out if you're looking to get this thing perhaps a little bit cheaper. The $60 area. I see two lows, 59.54, and then another one at 59.96. So I'd be holding on that. Big rally up too, so could easily get back half of that. Not a buyer on this pullback here in Ambarella.
All right, 8:15 now. Time for our first guest of the day, Brad Lamensdorf. He's a money manager, editor of the Lamensdorf Market Timing Report, which you can get in your inbox every day. Also runs a couple of ETFs. So we'll be talking about all that right now with Brad. We'll be back in a second. Alrighty, welcome back, traders and investors, to Benzinga's Pre-Market Prep. We're on the line with Brad Lamensdorf. He's the money manager and the editor of the Lamensdorf Market Timing Report. Brad, how was your Memorial Day weekend?
It was great. How was you guys?
It was okay. It was okay. It could have been worse, but it could have been better. So it was somewhere in the
Yeah.
middle. Somewhere in the middle. But glad to be back looking at the markets on a pretty quiet week so far. But I want to ask you about your your newsletter, the Lamensdorf Market Timing Report. I read it this morning. You had a very interesting take on this rally. So obviously this rally is nothing new as far as that's concerned. But you were looking at corporate insiders and why they're selling into this rally. So I want you to kind of break this down for us. You had a few charts and you were talking about insider transactions being at an all-time high. Talk about that sort of dichotomy there for a second.
Sure. To begin with, I put out that newsletter about once a month. You can go to lmtr.com and anyone can sign up for it and get it. It's a market debate. So as you mentioned, the insider selling is at a very, very high level. We're at about a 7-year high in insider selling, and there was actually more information that came out over the weekend that even supported a even more aggressive insider selling stance from Trim Tabs, which is where I get my service information. But the premise is that when insiders are making very large moves a la masse, meaning it's not just one company like Facebook selling out of all of their stock and it's a big company, when you have lots of different executives around the country making the same moves, it's relevant. So, for instance, in 2009, there was incredible amounts of insider buying. Everything looked very dismal, and yet the executives of the companies knew their companies best and were buying their own stock. Right now, we have just the inverse. Here we have the Trump rally. Everyone's excited. We're going to have a better environment, a better regulatory environment. Everybody should be very excited, right? However, unfortunately, executives are voting that their share prices are fully valued or they wouldn't be selling them. So these are not illegal insider sales. These are corporate executives that have to file forms to sell their securities, and they're doing it in a very, very large way, as you mentioned, a 7-year high. So that's very negative for the general markets, especially since they don't see the same advantages of deregulation and things like that supporting their businesses.
So, where are you looking to get this information from? I guess how do you know to look? Obviously, insider transactions, it can be a key indicator, but how do you know to look for that, and where are you finding that information from?
Been doing this for decades and decades, and I just know that that's one of the tools in your toolbox to be able to look around to. There's our special services out there. Many of them are a bit expensive. I tend to try to track a lot of this stuff myself, so having the market timing newsletter helps everybody keep up with that as I write about it a few times a year.
You mentioned that this bull market that we're in is the second longest in the last 117 years, and you also talked about short margin debt according to the New York Stock Exchange, warnings from the IMF. I think this is all really, really interesting stuff. Do you have any sort of guesses as to why insider selling is maybe so high right now?
So within either this past newsletter or the previous one, the price to sales ratio. So I actually run a short only ETF as well, and we analyze a lot of highly stocks that are very high priced, companies that aren't doing as well as they should be. And one of the things that we know is that earnings can be manipulated in a very large manner. Companies can issue debt and buy back stock to boost their earnings, which has occurred a tremendous amount over the last few years. It's one of the biggest arbitrages out there. So when you look at price to sales ratio, that number is much more difficult to manipulate. And the price to sales ratio right now in the S&P is actually at as high as it was, if not higher than 2000. So we know that 2000 numbers in the marketplace were nosebleed as far as PEs and valuation is concerned. And right now you have one of the gauges, price to sales, which is very, very rich. So that's probably my first guess is they just see how expensive their stock prices are, and they're willing to take advantage of that.
You mentioned your ETFs. I'm glad you did that. Let's talk about that. You run two ETFs, and we want to give you props just first off for your tickers. They're wonderful. HDGE Hedge is a short only, and then SQZZ Invest in short squeezes. So tell us a little bit about each ETF.
Yeah, sure. So my HDGE short only ETF, that is designed for helping people hedge. We have the number one downside capture in the marketplace. We are not an inverse product. We're an active ETF. So we mark on an NAV at the end of every day. So we don't have any kind of problems holding our position long-term in accounts. Because we are number one in downside capture for unleveraged, that basically just means, we're capturing our alpha when the markets get hit. So, for instance, a couple of years ago, the market was down 10%. A couple of winters ago, market was down 10%. We were up 20%. So we tend to get a lot of juice in our portfolio when the markets are going down, which is why traders and hedgers like to use our product. The SQZZ ETF is a long only, and what we're trying to do is we're trying to find companies that are really highly shorted, where we think the short sellers are just flat out wrong, and we also are able to lend our securities through a bank to the hedge fund community, where we also will obtain extra interest for our securities. For instance, Cirrus Satellite, one of our favorite positions right now, we lend that out and get 2.5% to 3% interest as the short sellers. I think the security is almost 20% short. So the short sellers have to borrow those securities and pay the bank to borrow those shares. So we take advantage of it there too.
Hi, Brad. Dennis Dick here. Great concept for a fund. This is original. I've never seen this, in an ETF to, be, trying to profit from short squeezes. But then obviously, being able to loan out the stocks as well is even a bonus for you. How do you go about picking stocks for? Are you just looking at what has the biggest short interest, or, talk about maybe just your process there on how you actually pick a stock that you're going to buy for SQ Zebra.
Sure. So every good strategy has a process. We first start with the stocks that all of the securities that are over 10% short. We also get a list from the banks that give us all the really high negative borrow-oriented stocks. For instance, not on our list right now, but GoPro, I saw on the list over the weekend, is being lent out for negative 25% a year. So if fundamentally that were to ever come into fruition, and meaning that the fundamentals were to improve in that company, the short sellers are paying an awful lot of money to borrow a security that could go up quite a bit. It's 40% short of the float is short. So we are active managers on the portfolio side. So we're not creating a quantitative approach to this. So we're just fundamental stock pickers looking through a basket of highly shorted names.
When you loan something out like GoPro now, you're saying, people are paying 25%. Obviously, there's going to be a cut there by the brokers that are involved there. How much is that cut? Like when, it's getting lent, in the end, short sellers paying 25%. Are you getting 20? Are you getting 15? I'm just trying to get a feel for what that market is like.
Sure. For regulatory reasons, I can't tell you exactly.
Okay.
But I can tell you this. Most banks range anywhere from 50 to 85%. 85% being reserved for, say, the University of Texas's endowment program that has, $120 billion in assets. I will tell you that we were in the upper 10% of that. The bank that we're operating with is giving us an extremely good rate for relative to what we're doing. So upwards of the top percentiles of what I mentioned.
We're on the line with Brad Lamensdorf for the Market Timing Report. Brad, when you're looking at stocks candidates for the SQZZ, how important is the days to cover input? Because we were talking about this on the desk and the volume and the days to cover and stuff. And to me, yeah, the days to cover can be a factor, but when you want out, you want out. I mean, if you have a big short position in something, you're going, well, days to cover is 12 days, so I don't have to worry about it. But you always see spikes in volume. How much is that a factor in your analysis?
That's a great question. I have two screens, actually, days to cover and percent of short interest. Sometimes you'll come back with, like, I'll be looking at a small bank, and I'll be like, wow, this is like 30 days to cover. I should be looking at this. And then I go and I look, and it's actually only 6% short, and it doesn't meet my criterion. So I am looking at that. It's not as important as the actual percentage. We're long a company called Chegg, CHGG, and we've been long it. It's up quite a bit since we started the fund, and it's 30% short, but yet it's also 27 or 20 days short as well. So when you get both of them, it's kind of like a double dinger. We like to see that just because, as you mentioned, it creates the elephant through the mouse hole effect.
We've been on the line with Brad Lamensdorf. You can check out his report, the Lamensdorf Market Timing Report, like he said at the top of his interview. I'll put the link to that in the chat as well. He's a long-time participant in the market and a money manager. Brad, thanks so much for hopping on today. We will talk to you again soon.
Thanks for your time.
Thanks, Brad.
All right, 8:28 now. Where are we at in the market, Joel?
We haven't moved much. We're still down 4.25 points here, 2409.50. That pre-market low, 0775. That coincides with Friday's low, so that is the big area, and that's also the highest low that the S&P's ever made, if that makes any sense.
And LMTR.com was the name where you can subscribe to Brad's newsletter.
I was going to ask Brad if he's like like cocktail parties. If if he's like talking short in the market, it's I mean, I'm sure he's long with the short squeeze fund and stuff, but I wonder how many people in the investing public, especially in this great bull market, Dennis, even pay attention to short squeezes or the short side of the market.
Well, yeah, that's just it. We've been in a 7 or 8 year bull run really here now since the financial crisis there, and there's so many long only investors, and they've always obviously been very rewarded here. I mean, it's been a very difficult trade on the short side there. Even the funds that Brad's talking about, I was looking at his HDG. He's done pretty well. I mean, the market's been straight up, and you can say, oh, his fund is down. But I mean, it's a bear fund, so it's done pretty well considering that, and obviously a squeeze fund too. That's a long fund because it's obviously on the squeeze side, but it's been a difficult trade on the short side. I've kind of tried to adjust a lot of my strategies as well, just in the last 6 or 7 years, because it seems like every time you're selling stocks, if you're selling the rips, you're wrong. If you're buying the dips, you're right. So you kind of go with what's working, and that's what I've been doing for the last 7 years as well, just going with the flow.
Are you? Would you ever consider something like this as a hedge on the short side? Because I know, personally, I just would raise more cash levels. Would you? I mean, because obviously with options, your timing's got to be right. ETFs, you have the price erosion. Would you ever consider something like this as a hedge on the downside?
Like buying in the HDGE.
Yeah,
Well, I short stocks.
but
So,
not in your
it's a
portfolio.
different story. So, I'm and I'm not a big ETF investor there. So I have, the SPY in my long-term investment portfolio, but it's just not my cup of tea because I'm a trader. So why wouldn't I just do the trades myself?
No, I'm talking
So,
about your
but
like portfolio, your overall portfolio hedge, not your
I,
trade.
well, yeah. Well, you could look at something like that too. I don't usually hedge my overall portfolio. I raise cash.
Right.
So,
Okay.
my investment portfolio. So, obviously, my trading portfolio is long short. It's almost always market neutral. So, when I'm long a few 100,000 worth of stock, I'm short a few 100,000 worth of other stock. It's almost always my trading portfolio is almost always market neutral. My investment portfolio, I have, basically just a long investment portfolio where when I get a little bit, think the market's overdone, I raise a little more cash, but I'm always staying somewhat long because what I've found is I used to try to short stocks in my long-term investment portfolio. What I found is long-term timing is just difficult. And, the upward market bias over the last, since the market has existed here, seems to work in the very, very long run. So, I stick long in my investment portfolio. So, and that's just, the way I've done it here now. And, I raise some cash, but I don't go short my net investment portfolio. Just, it's difficult to do. I mean, if you can do it, great. You call the market tops, and you can be an awesome market timer. But I'm trying to do that in my trading portfolio. I try to keep my investment stuff separate.
All right, Jimmy A's hopping with a question. I know I've asked you this before. Dennis, do you trade Canadian stocks on holidays like Memorial Day?
I used to, but you got to take a day off now and then. And you know what? The Canadian markets are just often very quiet, when you get it, the US market's not open. So it was quiet there again yesterday, at least, from what I can see. So, and it plays catch up. So you got to take a day off every once in a while. So, no, I don't trade on Memorial Day anymore in Canada. So I trade on the Canadian holidays in the US. So I take my US holidays.
Okay. All right, 8:32 here. We have 3 minutes before we
Yeah,
bring in Nick
I
Shaheen.
have a quick thing I want to ask. Have you
sure.
pull up TST just
Sure.
because TST just because Adam Fierstein, of course,
Street.com.
a friend of the show, tweeted this morning that he's leaving the street and going to Stat News. He was the only reason I went to that site. So
Oh, wow.
I'm just curious if there's anything happening this morning.
It's down. It's down 2.5%. I mean, it's not good. You lose Adam Fierstein. Obviously, this is Kramer's company there, or originally it was Kramer's company. But Adam Fierstein is a huge follow. I mean, he moves stocks. There's nobody in biotech who moves stocks more than him. So if they're losing him, it's not good for the company. But that being said, I mean, the Street.com is an 89-cent stock here now. Obviously, the company itself and the stock has struggled here. You look at it, remember it was back in the day, Joel. I don't know what the high on this thing was, but 89 cents here now. You're talking about penny stock.
Uh,
Adam must have had to move his own company or his former company.
It's
Apparently.
down 2.5%. So I don't think I'd be running out and buying it on losing Adam Fierstein. I'll say that.
Why do you think this stock hasn't, I mean, with Kramer's popularity on CNBC and stuff, what do you think has plagued this stock over the years?
I mean, it's just tough. It's tough to monetize online media. You talk about the biggest companies in the world that Facebook's trying to figure out, but Twitter's been figuring out. I mean, these are the companies that have huge amounts of traffic. You think about Twitter, how much traffic that to figure out how to monetize it is tricky. And obviously the street's the same thing. It's the same story. It's tricky to monetize online media. In the old days, you had a newspaper ad, you throw it, and you charge so much for a newspaper. But it's competitive now, and that's the difference there. So, that's why I think, it's a struggle there. And maybe not necessarily something the street's doing wrong. It's just tricky to monetize that type of stuff.
All right, hopping in the chat here. Ellie Mae, Elli, and I've heard of Sally Mae and Freddie Mac and Fannie Mae and stuff. Ellie Mae, boy, did I.
It's not as popular one, but this is obviously still traded, and it's been around for a long, long time. And stock's at all-time highs here, ELLI. So what can you argue about this?
What do
We're
they
right near
loan
all-time
money
highs.
on? What do they loan out in, or what do they? Do we have that? I'm not throwing you under the bus, Dennis. I'm just asking.
That's completely. I like the way Spencer. It's Joel. I'm not throwing you under the bus, but what do they loan?
But I am. But I am.
It's completely throwing us under the bus here. We're technical traders here, but Spencer, you got the save on this one. I'll throw it to you.
No, hold on. I have to look.
All right, we gotta go look it up.
Yeah.
I mean,
What
can you say about this?
Exactly what Ellie Mae in the lending portfolio. Let's go check it out. Who's faster, Spencer? You're gonna be faster. My internet's slow.
They got on-demand software solutions and services for the residential mortgage industry.
Okay, so
okay.
it's tied into that. So maybe they're not even into lending. They're into the services that help the lenders.
112. It's caught a cold every time. It's got over 112 here. All-time high 112.77. You had another high at 112.41. But are we gonna take a break to bring Nick in?
Nah, let's just bring Nick on.
Bring Nick in on the fly.
Bring him on the fly.
He's usually pretty good here. Nick Shaheen. He's the author of Create Income with.
Good morning.
Good morning, Nick. How you doing? One less day to sell premium this week. How you approaching the market?
I don't like to sell premium at the short weeks. For some reason, it always comes with drama. I'm not sure why. Usually the data gets murkier a little bit, and so I often opt out. I do publish the ranges, but I do opt out myself. And add to it that I will be traveling at the end of the week. I just definitely did not want to mess with that for myself.
Where are you going?
I'm going to Lebanon. I haven't been there in about 26 years, so I will be visiting for the first time. Don't know what to expect. So.
All right. Well, we wish you a good trip. Are we going to miss you next Tuesday, or are you going to?
Yes, I was going to send the email saying I will skip next, just because I don't know the infrastructure and how easy it's going to be to get on the horn with you guys, and I don't want to do that.
No, Nick, for 2 weeks. We better get all our questions in now. Chat, hurry up.
Go overall Nick, market. Go ahead, Dennis.
What are you thinking here? First, we're going to go back to Netflix here. House of Cards comes out. Do you watch House of Cards?
No.
Anyways, House of Cards comes out today. So this is, everybody's been waiting for 14 months. You've had to wait for season 5 here. It's trading up here in the pre-market 163, and I know you got some option plays for us on NFLX.
Well, in NFLX, it seems like if you buy calls, you're good to go.
Works.
Just close your eyes, buy calls.
The dip.
Plug it. What dip?
There's no dip.
Sure. Like somebody else, they're buying the dip. Well, don't you need a dip first for them to buy it? So, speaking of which, seriously, for Netflix, it's the fundamentals. I worry about Netflix down the line, and I worry more that management is not too concerned with all the competition that's coming. I mean, Facebook, Google, Amazon, those are not scaring you? I mean, it's pretty ballsy of them not to be scared by a competition like that. So if you don't hate, I mean, I wouldn't short it. That's for starters. And if I do, I would do it for free somehow by selling very long dated puts way, way below current market, and just to get some money and invest it in shorter dated money, debit put spread of sorts. So maybe that's the only way I would short it personally. But fundamentally, I worry about it down the line, but it's one of those stories that you can't kill right away because the promise of global growth is a story that is alive until it dies, and it doesn't die overnight or with one headline.
All right, let's go overall market here. We got a nice chart of the E-mini S&P 500 futures. I mentioned 2408. That was the highest low this market's ever made. Pre-market low 2407.75. Nick, I mean, let's talk. What are you looking for to key to some more downside action?
A couple of points jumped at me this morning off of the chart I just posted in there. One is we clearly have a line above right now. You're talking about below. I'm not looking below yet. You need a headline to go below and sustain it. Okay, those two boxes in turquoise, whatever that called, cyan color. Last time we fell on March 21st, it took us like 20 days to break out. This time it's like four ticks, and boom, we broke out of the where we fell from. And just not too long ago when we had that little market dizzy on 517-ish. So clearly they're not that scared. They, as in the market in general, bulls, whatever you want to call them. So unless we get a game-changing headline to the downside, the dips, whatever they are, they will be bought. It's how fiercely they will be bought and how much follow through. Every day, you know it. I put a note in there. Buyers are hesitant of sorts, but they are still very dangerously bullish, meaning don't stay stubborn. If you're successful shorting for a day or two, I'd book profits and wait for the next time to, if you want to do it. If you're a short player, if you're long, just buy the dips as long as the headlines that we're seeing are not game changers. One day the dip will be sustained, but we need a headline or a reason to. Otherwise, the status quo will continue.
All right,
Nick,
go ahead, Dennis.
I was just going to ask, jumping over, well, let's talk about the big guns. We got the war here, and we haven't talked to you about this, of Amazon and Google, who is going to hit $1,000 first. So we should have done a wage.
I'm very puzzled by this question. Google is almost $2,000.
Well, yeah, you're right when you look at it like
because it already split eons ago, and it was at 900 already, and it's two tickers, so it's inching at what, $1,900 for Alphabet, and CNBC keeps bumping it. The race between Alphabet and Amazon. So talking about the Google versus the Amazon, I mean they're both so close. It could be either of the two and doesn't really matter. It doesn't because they're rallying off of different stuff. One is a momentum, lean and mean operator, Amazon. And the Amazon story, we've talked about it I remember saying it's going to be 900 in no time, just after they sold it to 800 and change on the earnings, a couple of earnings ago. And look at it now. It's way above that. So they're both fundamentally sane. And if you look at the indices, you think, oh my gosh, we're in the stratosphere. But if you look at the valuation of Google, for example, or Apple even, it's not that crazy. Therein lies a dilemma for me. You look at the individual big ones, they're not overly priced. But, well, forget Amazon, but that's how it operates. So, the indices are high because of the mega caps. They can drag the indices. But if you can so the dilemma, bringing it back to the market in general, you look at these guys propping up the big indices, but when you look at the small caps, they're still relatively lagging to their highs. So you got to see who's going to do what. Are the small caps going to play catch up? Is that the opportunity, or are the big guys going to take a rest a little bit now that the earnings are out of the way, or maybe somewhere in the middle?
Nick, there's a stock in the chat Brad D is asking about, and I think I saw a note from you maybe going back on Friday. Whole Foods, WFM. Brad D sees it in the upper portion of a 2-year trading range from 27 to 37. And Brad D listens to you, obviously. He say, is this an iron condor candidate? Or, Nick, are you just leaning straight towards the short side?
It looks like a Loch Ness monster to me. It is extended, and I don't remember exactly why it rallied early April. There was one giant candle, but I think you guys mentioned Kramer earlier, and I think he's a fan, and he said there is some period of time where the headline, that awful health issues that they had, falls off the map, and apparently it was then or thereabouts. So from that sense, that maybe the fundamentals are a little better now because of what the media perception is saying it is. But technically, I think I would wait to get into it just because the last few candles do not give me very good faith in the 35 area. I want to see it hold as forward support because it had been some sort of a resistance. Besides, it kind of looks like an upside down cup. Not perfect inverse cup and handle. I'm not a technician, so if you are one, don't get offended that I draw my lines with a big fat crayon marker and not a nice thin line. But the it's lower highs knocking on a floorboard of sorts, which is just above 35. So I want to see it hold that before I want to commit long. And if I do commit long, my personal preference would be selling puts below a level that is not likely to come.
And wasn't
Chat's going to start. Oh,
yeah.
go ahead, Joe. Sorry.
I was just gonna say, well, a lot of this was on speculation that they were gonna be bought out by.
Oh yeah, that's true.
Yeah.
That's true. I remember. So therefore, no. To answer that question, good thing you reminded me. Definitely not an iron condor candidate. If anything, a credit put spread candidate because the headline is awaited, and if it does come, the upper side of your iron condor would be a complete blowout.
Chat DC wants to know about Allstate. ALL stock hit another all-time high here on Friday, 86.62, closed at 86.5. I mean, the stock's been a monster too. Lots of stocks hitting all-time highs.
Yes, and I do come across charts like these all the time, and I always say if you know the company, then you know at what level you want to own it. Then what I would do is I would just sell put spreads or puts below that level. And if something happens, hey, you bought it cheaper than where it was now, so you should be happy to take the assignment. Technically, I mean, you can't argue against that, except for the fact that if markets in general correct, how well would it hold up? And therefore, you need to set your target below that level to see if you want to survive it, if you want to own it. But I can't, I mean, higher lows, it's like a rising wedge that are extreme. And I see that, like you said, Amazon, Google, they all have that look to it. But that's what happens when nobody sells anything for any period of time.
Nick, before we get another chart here or stock in the chat, I gotta ask you about just a perennial dog here, and I know we've talked about it. Ford Motor makes it on the cover of Barron's. The future of Ford. I know they're looking for a big 30% upside. I mean, that would take it.
Who did that? I closed
Barron's.
my sold puts. Oh, I had sold puts at 9 and they were winning. So I was like, you know what? I don't like what I'm seeing. Everybody's hating on it. So Ford and GM, I think they get to a level to where I get brave and I sell puts below a level where I'm willing to own it or put spreads. But when it gets to be a single digit stock, I tend to stay away from it, give it a little breathing room. I will do it again. I just need somebody to hate it, to really hate it. So today I haven't checked pre-open, but this is as good a level if you think the company is going to survive, and that if they're doing the right things, shake up at the top. I'm not sure the reason behind it. It makes me a little bit uneasy from the fundamental perspective. Technically, it's not that pretty, but it's pretty low. And then now I hear more chatter about the subprime issues with the car industry. I thought I thought this was going to happen like last year. Like a couple of years ago, everybody started talking about it, but it's taking too long to get into the headline again. So I'm not sure on what side to fall. That's why I closed my puts. I was like, I don't know what's going on. I'm missing a piece of the puzzle. I don't have any edge, so I bailed out of it.
Value trap. That's been the problem in Ford. Trust me, I've been stuck in this value trap.
Uh-oh.
Yeah, one of those long-term investments that I wish I didn't have. But let's move on here. Chat. Johan Smith asking about Caesar Entertainment. Zebra R. He's saying a lot of casino stocks have been running, and that is true. MGM up near highs. Wynn Resorts has been moving. Las Vegas Sands, smaller one. Zebra Roger.
I think you see the potential in Zebra Roger. If you go out to a weekly candle, then you'll see that this area where it's at right now could fuel some buying. Because when you revisit a zone, if you remember how Apple broke down when everybody hated it before the split, and it takes a long time, like a rounding bottom.
Right.
And then they break through the top from which it fell a while back. Then, they took their time, and the rally usually has some meat behind it. So if you're short, I would worry. If you're long, I would stay into it, and see what happens. just above here. The shorter term, they have higher lows knocking on a roof of sorts, the 1140-ish area. So I no reason to close along.
And Nick, I just want to get your comments. I know you follow the oil market as well. Crude, just the headline of headlines constantly move around on it. Below the $50 level today. Trading range here, it's crude, or you looking for a rebound?
If you read the chart I'm just putting in there, I only am looking at, I'm not actively trading crude, but when everybody hates it, I sell puts below and profit from that. And I've done it over and over and over under two premise. Okay. I wrote them down on the chart so I don't forget them. Anywhere when it gets to the lows that we just saw or below, say 45-ish or below, it's a zone. It's not a hard line in the sand. It's bad for OPEC, the pocketbook. Anywhere above 52 or area where everybody tries to say, okay, it's going to 60 next few ticks, I say it's bad for OPEC market share. So I believe it's going to be in between those two numbers until the situation we have right now changes.
All right, Nick. Any final comments? We're not going to hear from you for a couple weeks. Are you going to still keep active with your notes, or how are we going to?
Yes, I usually continue covering the markets. The only thing that changes is I can't man the touch room. I can't commit to it. I pop into that on here and there. But like I said, I don't know what they expect infrastructure-wise, but I'm told it shouldn't be a problem. However, from the market perspective, I don't stay stubborn one way or another. Like this morning, I could probably see the bears, drooling over the fact we were down 5 points. I bet you we opened just about green. And so if it took, there's a thin line above and there's a big line below. So big as in thick, nice support, which is, like I said, they're going to buy the dips unless we have a change in the thesis that we have now. And that means like scary headlines like Trump out, for example. That changes the thesis. I'm not talking that, somebody quit in his lineup.
All right, Nick. Well, we are going to miss you for the next 2 weeks. Have a safe trip, safe travels, and we'll be looking forward to getting you back on, 3 weeks from today. So safe travels, Nick. Thanks a lot. We'll be
Thank you.
back with you then.
Likewise.
All right, 850, Dennis. He thought, now when he said he thought the S&Ps were going to open green here, Dennis, I thought I was going to maybe get a little lunch wager out of them there. We're down 3.25, but we still have 40 minutes before the open. You see any buying bet? What's the balances?
No, you know what? I'm actually seeing some sell imbalances here, so it's surprising. There's a few buy. Okay, so it's mixed. So I should say it's mixed, but I'm seeing some interesting sell imbalance here. Coca-Cola 210,000 to sell, General Electric 101,000 to sell, Johnson Johnson 30,000 to sell. Some of the more defensive stocks here. Also seeing though with the buy balance 666,000 shares to buy and forward. So somebody's reading Barron's and obviously putting some big orders out there this morning already with that type of buy balance. Walmart 45,000 to sell. Just trying to go through Dow Chemical, DOW 32,000 to sell, Mastercard 26,000 to sell. They're not huge, but there's a few standouts there, so that's why I was just listing those off there. But I'd say, imbalance is probably not influencing this market too much. Not sure, we were obviously just bouncing around here. Oil's starting to come back a little bit as well, probably helping. It's down a little bit further earlier, but, we're bouncing back. These buy the dippers are still even out there, even in the pre-market.
All right. We were talking about the ratings parade going on over the weekend, and we touched on quite a few of those. Some of those were the smaller stocks. Were there any that we missed?
Yeah, there's just a ton of them here today. So let's go BlackBerry, BBRY. That's getting downgraded at Raymond James. It's quietly been on a tear. And, there's a short squeeze. Its candidate there was back at 7, went to 8, 9, 10, 11. It's just been running here. Those patents are all of a sudden worth a little bit more money here. But here you are. You've been hanging out here just above $11 for the last week. And now you're breaching it, on this downgrade in the pre-market. So that is a little bit concerning here. Had a red candle on Friday after making a new high. Now if you start taking out 11, there is some air below.
Yeah, this one was interesting. Someone caught it in the pre-market and said it was, trading got a nice pop, and it was basically off news that was already out there in the market that about getting the payment from Qualcomm, some $814 million. So trading on kind of old news or confirmation of the news, they got it up, nice and tight, and then they plopped it looking at that 11 buck area. A lot of air if it can't hold 11, between 10 and a half and 11 after a major rally in Blackberry. We'll see if it's going to give a little bit back here, but definitely a headline stock.
You got Semantic SYMC that is catching an upgrade at Barclays here this morning. Stock hasn't traded much, just a few 1,200 shares here, but I can tell you it is bid up here at $30.03. So that would be opening over the $30 psychological level there. That's the psych number for me, 30 bucks. Can get over there, maybe have some follow through, but I'd like to see what happens at 9:30 at the open.
This would be a Harlan Pyan chart here. Maybe we'll get Harlan to fill in when Nick's
Been a while,
done.
yeah. Let's get Harlan back on.
Harlan, he would say, rally up to 33.22, pull back, found support at former resistance at the $29 area, and now you're getting a little bit of a jump start. And 30 was a big area of congestion back in April and May, so I'm not minding this one. Even if you could buy it at 30 or near 30, you're not really getting much of a gap here. Came hard off the $33 area, but we'll see if he can go back up. Major resistance here if you really can clear 30. You have your 2-day high at 30.24, and then things open up to 31 and change after that.
Zynga getting an upgrade at
Zynga.
Piper Jaffrey here this morning. Been a little bit of run too. The dog's barking a little bit. Zynga here has been very quiet money here for a while, and it's got a nice May. Run from 280 up to 350. Now it's 358 here this morning with ZNGA.
All right. Wow. 363 has been the high of the move. Let's see if we get anything going in the pre-market here. Boom, boom, hanging out at 360. I guess just looking for follow through here. You wanted to get 360s held it a couple times. Your 3-day high, 360, 363. So above that, more upside, maybe all the way to 370. Coming back on the downside, you have a buyer here at 340. You've had four lows in the last 6 sessions at the 340 area. So trading the range there in Zynga, and maybe we'll dig up Mr. Pachter here in a few days or next week and see what he thinks of Zynga.
Spencer, there's just a ton of ratings there. Is there any other ones that you saw that you wanted to highlight there that you had on your radar?
I mean, we got the big ones. We got Zynga. We got Buff the Wild.
Maybe just go through some of the smaller ones there just quickly here, just to ring them off, maybe in a minute or two.
Well, we had AutoZone.
Just because there's so many ratings changes.
Did we get to AutoZone? Because AutoZone had the nice pair, the downgrade at Wedbush and the upgrade at Goldman. Tesoro upgrade at Morgan Stanley. And what else did we get? Newfield.
Valero was downgraded at Morgan Stanley.
Right.
So you got a Paris trade there from Morgan.
Quiet period up on AMGP, so a bunch of initiations there, mostly at the buy side of things, and I mean that's really it that I've seen.
Yeah, a lot of smaller ones there, so we can't highlight all those. What do you think? Just go to AutoZone here, Joe, because this stock has absolutely been murdered. And it's going to come back. It's coming back here this morning. It's up a little bit here again. Obviously, we get one analyst downgrading, one analyst upgrading here, but getting into a gap area.
Get into a big gap area. Also, do we have a red dog reversal there the day after earnings, right? You took out
I think so, yeah.
Yep, you took out the low. You came back. You settled above that low price, and your stop would have been 573.80 here. I mean, what are you going to do? I mean, there's a gap between 620 and 660. So, I mean, the only people that are going to be selling in between that area are the people that picked it up on the cheap here, just looking for a standard deviation move, getting out, booking some profits. Long-term investors are praying that it gets back up to fill that gap at 660. So I wouldn't be fighting this one. 3 green candles in a row. Nothing between 620 and 660, plus, $600 stock. Probably not the easiest one to trade on an intraday basis.
And then just looking, one company that's going to report tonight, we're kind of coming out of earnings season, but we are going to get VMware, and that stock has been running up ahead of the earnings reports as well. You know what we always say, when the stocks run up ahead of the earnings report, they need to kind of beat pretty handily there, for the stock to continue going higher. That being said, too, you're coming up to a big psychological level here in VMware as well, $100. Only 3 points away.
Wow, this thing is doubled since February of 2016. Oh boy, let's see if we can get some follow through. I agree with you on this one. I mean, if you're going long into this report, you can draw a nice trend line maybe off this 43 and a quarter low and stick in with the top of that trend line here. But triple digits, 103.86. That was your high way back in August of 2015, and this is the Dell or not Dell. Dell took out EMC, right, and didn't VMware.
VMware, yeah. So and then VMware, they're still, and Dell is now traded here. What is it? DVMT, I think. Dell Technologies there,
Is
and it
it
would
really?
probably still own a chunk of VMware, I would think,
Really?
because EMC owned, or did they spin it all off?
You know,
I believe I believe Dell probably still owns a big chunk of VMware because EMC owned a big chunk of VMware still, and then they bought EMC, so I'm just assuming Dell still owns that chunk of stock.
do you
The
trade?
stock charts look alike? Yeah, they do. DVMT and obviously, I think that DVMT has a big chunk of VMware in it.
Do you trade this DVMT at all? It's not real
I've
liquid.
traded a few times. I've traded it with VMware, so as a pairs trade, and I think you can see put the two charts on top of each other. Those things look almost identical. So I'm telling
Huh.
you, there that DVMT, that's a big chunk of VMware right there.
Yeah, it's had just a fantastic. Yeah, great correlation there. Doesn't even know that DVMT was back on. All right, Spencer, 8:59. You want to wrap up today's show and let us know what's on the docket for Wednesday?
Yep, on the docket for tomorrow's show. Tomorrow we'll have Phil Davis. We tried to grab Phil on Friday, wasn't able to, but we will grab him tomorrow 8:35. So Phil Davis, the author of Philstock World. Hope you enjoyed our show today. Hope you enjoyed our chats with Nick Shaheen and Brad Lamensdorf. Again, if you want to see either of their products, for Nick, you can go to Create Income with Options. Threads.com is his site. It's on Market Fires. For Brad, his site was lmtr.com, where you can get his newsletter and insights there. That is our show for the day. Please remember that all the information, material, and content on our show is for informational purposes only and not meant to be investing advice. Also, want to remind you, check out Benzinga Pro. It's Benzinga's real-time news platform that we're using during the show to get news and then to relay it to you. You can get a free 2-week trial by going to pro.benzinga.com. If you want a trial, you can email me, spencerisrael@benzinga.com, or you can just email premarket@benzinga.com, and I will get you hooked up with a demo from one of our Benzinga Pro reps. Have a good rest of your Tuesday. We'll see you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.